fun today talking to people about something that I do on a regular basis. I also thought that I wanted to start off with something that I actually had a look at and it popped into my inbox today. So for all of those of you that have dialed in, you are braver than you believe, stronger than you seem, smarter than you think, and loved more than you know. So from a financial person, a little bit of the softer touch starting this webinar today. And yes, we're going to be looking at cash flow. Sorry, that was the wrong button. We're talking about cash flow today, and this is obviously something that is crucial and important to every single SME, whether you're a small business owner, whether you're medium-sized or a big corporate company. Cash flow is basically the bottom line in your company as to whether you're going to survive or not. I think we all know what this pandemic has done to us in terms of cash flow. We've all had to take a long, hard look at where we are in our businesses and re-look at the way we do business to ensure that we stay afloat in the market. So many of you know this slide that we obviously is as part of our advisory side. We just give you a bit of an outline of businesses and stages of businesses. So in a startup stage, pretty much cash flow is probably not even there. So your owner or your business owners are actually putting cash into the business just to ensure that they can get the business going. If they've been lucky enough to get funding, then obviously there's a little bit of a foot up. But I think most of the business owners we know pretty much started it themselves. Then you get into a lifestyle business where you pretty much are just surviving out of your sales and the money that you're making that might have taken a while to get to, but you pretty much are living off your business. So your cash flow is most probably something you do on a regular day-to-day basis, just to make sure that you actually are staying afloat in the market. Then, of course, once you get to a point where you want to scale your businesses or scale your business or businesses, you might be looking for funding to ensure that you can actually take your business to the next level. But again, I think a lot of business in the current climate that we find ourselves in have to either be making money and making sure that they're making it correctly in order to take their businesses to the next level. And then last but not least, sellable. And a lot of what we do is actually helping you to get your business into a sellable position so that when you actually make the decision that you might want to sell, hand it down to a family member or to a management team, this is still a very crucial part of your business, that you are ensuring that your cash flow is a very stable aspect of your business. And we're going to now start looking.
Barbara, so maybe just to add quickly, it's also important to know that the more you're in control of your cash flow, the higher the value of your business. So if you have to think of buying shares in a business or you want to participate in the running of a business at the executive level, the companies that will attract you the most are the ones that's on top of the cash flow. There's no question about that.
Absolutely, yeah. So the less money or input you need in your business to actually keep it going on a monthly basis, the more attractive it would make to somebody that would want to buy that business. Thank you, Henk. Okay, then part of what we do with our customers is looking at the key elements in your business. And as well, in terms of trying to get your business to a place where maybe you do want to hand down or sell it, these are the key factors that you need to, as a business owner, understand fully, know how to implement in your business, and ensure that you actually have your policies, procedures in place to make sure your business can survive without you in it. So financial management and planning is key, one of the top factors that we will work with you on. Scaling your business, making sure you can take it to that next level when you're looking at different products and whether you want to grow your business. Your risk factor. So your risk factor is how important your customers are, your suppliers are, and key employees. If, for instance, if you lose your biggest customer or your biggest supplier, how will your business actually cope through that process? And then today's topic that we're going to go through with you is your cash flow and potential capital requirements as you do look to scale your business. But obviously cash flow is one of your key aspects. Recurring revenue. Obviously, the more recurring revenue you can generate in your business, it also makes it a more sellable business, because the less effort and time people have to put in generating cash for your business or generating income, makes it a more valuable business to sell. And then your competition, how do you differentiate yourself from your competition? And sometimes managing your cash flow and the way you do business is key to this portion of the business consideration as well. Last, well, not last, but customer service. So would your customers actually refer you to other businesses? And this is sometimes the best sort of business you can get, where somebody actually refers you, that you don't have to go out and do actual cold calling to find new customers to bring more income into your business. And then last but not least, your succession planning. So in other words, how involved are you in your business? Do you delegate down to management? Because a lot of businesses will not have a great sale value if you actually are too key and too important to the business that they actually can't buy the business and move on without you. So it's all about your company structure. We help you with that as well. So we look at your different departments and divisions, and we help you plan either your exit strategy or just allowing you to become a chairman on the board and actually still earn income from the company that you've grown.
Barbara, I see we have
Yeah.
a few newcomers today, people that we haven't dealt with really in the past to this level. So just for you guys, as a point of interest, we use these focus points to actually benchmark your business as key elements that we assess to see where you are now and how do you need to prioritize your strategic actions forward to plan where are you going to take your business from this point onward. So cash flow is just one of those critical components.
Thank you, Henk. Okay. Then this slide, we also use this quite often just to help startups and business owners to understand why their businesses don't fail. I'm not going to go too much into it, but you can see the second highest reasons why startups fail is because they actually run out of cash. And I think a lot of you realize that in the current market, the economic climate we find ourselves in right now, the backlash that we've had with COVID, the pandemic that I don't think is going to end anytime soon for most countries worldwide, we obviously might be a little bit more reliant on trying to get funding for our businesses. But if you can't provide funders with the correct information as to why you need funding, you're going to potentially run into a problem there as well. So it all comes down to the way you manage the business. Those factors that we've showed you are so key to ensure that you don't actually end up running out of cash. And that's what we will work with our customers on, to ensure that they manage their businesses correctly. I'm not sure how many of you are actually watching the American election at the moment. I'm on it all the time, and one of the things I've taken out of some of the information coming through is that our economists locally in South Africa feel that the Biden administration, obviously being the Democrats, and yes, we might all have our ideas about Joe Biden's age, etc., but our economists feel that a democratic government will actually be better for South Africa's economy. So that might be a good topic to discuss at some point. Okay, so moving forward, how do we consider getting our cash flow where we want it to be? Because your financial person in your business is really going to be the person that manages this on a day-to-day basis. And what it comes down to is actually planning and working with your various policies and procedures, your financial planning, your financial forecasting, your sales forecasting. So like an iceberg, and we all know the story about the Titanic and why it went down. And I think you can put that into the aspect of why a business will go down as well, is because a lot of the work that gets done is actually below the surface. So you've got to make sure you've got the right people to help you plan and structure your business in such a way that you can then focus as the business owner on going out and selling your product and your services to the industry that you find yourself in. So obviously, once you work on the we call it our growth matrix, where we actually work with you on what products you sell, and we push you to plan forward on how much you're going to sell, and then we work with you on your budgets. Your person that's in charge of your finances will do daily, monthly, weekly reviewing of what monies is coming in, what needs to be paid, and how you stay afloat cash flow wise. Okay, so yes, it's all about cash in the bank and how it can influence your business on a daily basis, as well as when you get to that stage of maybe handing over. So this is a very slide that we like to talk about. Revenue is vanity, profit is sanity, and cash is reality. And trust me, coming from the side of our business that looks after the cash and making sure the bills are paid, yes, it is a huge reality check. So we put things in place to make sure that I stay sane and I sleep well. And the fact that revenue is vanity, yes, because sometimes you will show this great turnover. You might have generated a lot of invoices, but if the money doesn't come in, then you have a problem with cash at the bottom. And obviously your profit might look good, but again, paying out things like vehicle repayments or loan repayments could also have a bit of an effect on your cash at the end of the month. Okay, any questions so far? Anything to add? You guys, please feel free to chime in with me.
Barbie, just to mention, I've unmuted people, and you can also raise your hand, wave your hand at us if you feel you want to ask something, or maybe just even a comment. Some of you come with us a long way, and we all have crossed the bridges of actually planning forward cash controls, having month-end situations where we need to really focus on getting our cash forecast in place. So if you have any experiences, please feel free to share with us as well.
Yeah, and let's not forget the good-looking gentleman that's still on our notes there. So I think we still look back at him with fond memories. Okay, so how do we focus on cash in the business? There's various ways that you can get money into your business. When you obviously are a startup, you will start with what we refer to as seed funding. And that is as a business owner. And again, we're talking about if you don't have somebody loaning you the money, but most business owners start up with their own cash. So they actually put it into the business to help themselves get going. Under the current circumstances, where I think we're also seeing a lot of people being retrenched again, and a fair amount of that has happened. So they will take a retrenchment package, and a lot of times they take that money and they try and start up their own businesses. And it's very important how you use that money and put it into the new business to ensure that at a later stage, when you're making profit in your business, you can take those funds back out again with no cost to yourself. Then when you're looking to expand your business, you might also potentially need money to actually take your business to the next level. And again, you can look at various options for money, whether it's maybe an overdraft through your bank or funding from somebody that's prepared to actually give you money, maybe a angel investor. If they like what you can project and tell them you're going to be doing in your business, you might get money in that way. Same on the working capital side. So if you decide you need a new machine because your business is going so well, so now you actually need a new machine so that you can do work quicker, smarter. You might look for funding there where you have to go into a higher purchase. Again, your bank could come in and help you with that as well. Or somebody like a business partners would potentially look at funding with you. And then last but not least, you actually want to get your business into such a space that you've got a bit of a cash cushion. I think a lot of people, due to COVID, realize that they haven't been saving. I think South Africans are known not to save. And I think we do understand the reasons why we don't, because I think a lot of us do struggle. But I think we as business owners have learned that to actually get through a pandemic that we've been through now, our businesses do need cash on hand. Just to tide us over, yes, UIF has helped. So the TERS payments have been great. But as a business owner, we need to learn to put cash aside just to help us when we do hit a bit of a rough spot. Okay, so what is cash flow? So with any new business, very much it's how much cash do you have? Again, I come back to when business owners start, sometimes they start with some money that they've got from a retrenchment package, or maybe some family members giving them money because they've got a great idea. And what do you need to do with that money in order to get your business operational? So if you decide that you're going to go into a business where you are going to sell a product, you might want to use that money and go and buy a product so you've got it on hand, that when you get your first customer, you can actually deliver goods quite well. You obviously will buy it in at a price, and then you'll set up your markup so that you can make a small turn on that product. So once you've obviously given out your cash, you now will sit with less cash in your bank account, and then you'll have to go out, sell it, do that invoice, and then wait for that money to come in. Again, what's important here is how quickly can you get that money into your account? What are your terms that you're going to give to a customer buying from you? So if you secure a deal, do you say to your customer, listen, guys, I need 50% up front to get this deal on the road, and then you can pay me the balance once I've delivered the goods to you. So that's quite an important part of how you're going to get your cash flow cycle moving as well. Your cash flow is not quite the same as profit, but it's definitely related. Sorry about that. And what are the symptoms of a lack of cash flow? So a mismatch of resources, a timing problem. So in other words, if you don't get your money in quick enough, or if you don't have a set agreed to terms of payment, then that will create a problem for you in your business, which obviously then could affect your expenses being paid, whether it's things like salaries or telephone accounts, rent, etc. If you haven't thought about how to plan forward and how you're actually going to grow your business, so sitting down and working on something that gives you a plan of how you're going to market your products, how you're going to get out there and sell, what you're going to do to entice customers. If you don't have a strategic growth plan, it's going to affect cash flow as well. Then obviously, if you're a bit of a softie like I can be sometimes, you feel guilty to go to your customer and say, listen, you owe me money. I need my money in the bank. And if you don't do it on a regular, it just grows and becomes a bit of a problem and a nightmare problem. So what we've learned to do, and Damien and Henk remind me of this regularly, is use your process, make sure that you ask, send a WhatsApp, talk to your customers. And then, of course, if you actually exceeding your gross profit, so based on your turnover and what you actually buy the goods in at, if your gross profit is set at a certain margin, but you are spending more than that gross profit allows for, then you're going to have serious cash flow issues in the business as well. Okay. Any questions on that one? All right, moving forward. Sir Richard Branson, which I think we all know him, obviously one of the most very wealthiest people that's in the world with great businesses. He said, never take your eyes off the cash flow because it's the lifeblood of the business. And I think, us as business owners understand that fully. So now what I'm going to do is I'm just going to play you a little video that you can see. This is what a lot of people are telling us.
No matter how expertly you manage your budget, you can confidently project a surplus at the end of the year and still not have enough cash at some point during your fiscal year. That's because money doesn't always come in and go out smoothly from day to day or month to month. In order to weather the ups and downs properly, or more importantly, so you don't end up in hot water, it's important to project and plan your cash flow. Let's explore that, shall we? First, it's important to understand the difference between your cash flow and your budget. Know that they are both critical to understanding your overall financial picture. Your budget is a plan for how you will earn money and spend money. Your cash flow is a record of when money comes into and goes out of your organization. In order to have cash when you need it, you'll need to create a cash flow projection system that works for you. Planning a cash flow is different from budgeting in a few key ways. Cash flow does not relate to calendar or fiscal years. And just because you have a cash shortfall at some point during the year doesn't necessarily mean your budget is in trouble. Your cash flow projection does not include non-cash income and expenses such as in-kind contributions or depreciation. Most importantly, cash flow does include all the money that comes in and out, including transfers, loan payments, and sales of investments. Cash flow planning begins with a realistic budget. It's important to understand what types of income you have, when income will come in, and when expenses will be paid. And you'll need to make accurate assumptions about your cash flow over the course of the year. Plan for things such as seasonal needs, payroll, benefit plan payments, discretionary repairs, capital purchases, or for the timing of when grants or contracts will be received. Then be prepared for cash shortfalls, those times of the month or year when cash isn't coming in, but the bills are. And monitor and respond to cash shortfalls in a timely manner. If you find yourself with a cash shortfall on the horizon, here are a few tips. Consider if you have the ability to bring money into your organization faster. One way to do this is to build relationships with foundation program officers, major donors, and contract managers, and ask if payments can be made earlier in the year. You might also consider changing the time of your annual campaign or special events. And review invoicing and collections practices to see if you can bring in money faster. Another tip is to send out money slower. To do this, consider the timing of payroll and benefit plan payments ahead of time. Discuss payment options with service providers and negotiate installment payments or request longer payment terms. Plan the timing of discretionary repairs or capital purchases for the year. And find other sources of cash, such as a line of credit, or use your reserves as an internal line of credit. By planning, preparing, responding, and understanding cash flow, you can ensure the financial health for your organization 365 days a year.
Okay, so I think that's really touching on everything that we've mentioned, and there's obviously a few other little items that come through there. So once your company has grown and you've got vehicles, etc., these are all things that you're going to use in your budget, where you have to make the decisions around planning for repair work on vehicles, but that will all form part of that growth matrix that we mentioned to you. So again, this slide talks to the business value, your business's value, and the less cash or capital injection your business needs when you are working on it yourself, as well as when you get to a point where you'd like to sell it, sorry, the less money that your business needs to keep it going is going to actually make your business value a lot higher. So anyone prospectively looking at your business will push you down on value if they get the sense that your business constantly needs money to prop it up. Okay, so it's important that we work on these factors on a regular basis to make sure that your business value is as high as possible, that you can actually work on this when you decide to move on. Okay, so just to talk about your break-even analysis, and not a lot of business owners understand the concept of break-even analysis, but it's something that you should work on in your business on a regular basis. And the whole point of it is you as a business owner need to understand how much do you need to generate in sales if you take into account what it costs you to get that sale. So in other words, if you make hot dogs or hamburgers, what is your actual cost of sales? In other words, your patties, your buns, etc. How much does that cost you? What do you sell it at? And what is your gross profit on that actual product? Once you get to that, then obviously it depends on how much of it you can sell. And then below your gross profit on your sales, you will then have money to actually pay your expenses. So that is your break-even analysis, that you need to ascertain whether you are coming out at a profit every month. And then obviously that will also determine cash in your business, if you are collecting your funds in the correct way. Okay, so how do we identify and solve and improve cash flow issues? If you fail to forecast and do a budget, then you are not going to have an idea of what money you're going to expect and what are your expenses against it. So you need to make sure that you sit down and plan where you're going with your business and what it's actually going to cost you to run that business on a monthly basis. So let's just say you've done your forecasting and you've been very excited that you know you can sell yourself and your business. And then what happens? You go and do your projections, you put your budgets against it, and those sales actually don't come in. Then you've got all these expenses that you've budgeted for, but there's no money coming in to actually service that debt. So the one thing that we always learned was don't sort of go too high, be a little bit more conservative, and then make sure that what you're budgeting for on your expenses side, you can actually manage that on a monthly basis.
Sorry, Barbara.
Yes, Damian.
Just quickly, with regards to something like forecasting, one of the big misconceptions about forecasting is that people tend to think you're making a number up, or you are just sucking your thumb and putting a figure down for it. Or even worse, in my opinion, you go to your accountant or you go to your bookkeepers and ask them to please help you with your forecast. So what they do is they add a 10% increase or a 10% growth on your sales revenue, and a 5% growth on your expenses. The biggest thing about forecasting that we tend to forget as business owners is what we're doing for that period is putting down targets we want to achieve. So if I'm looking at my sales forecast and trying to forecast for my sales going forward, the idea is I want to know what target do I want to reach for that month or that period for my sales forecast. If I'm going to make that amount, if I'm going to make those amount of sales, what expenses or what cost to those sales do I then have to cover to make sure I can deliver to those sales? And that's where your forecasting and your planning become really critical. If you're going to overestimate, you're going to be too optimistic, or you're going to try and be too pie in the sky sort of thinking, chances are you will have the expenses sitting there, but not the sales to supplement those expenses. If you think too little, or you forecast for too little, it means that you may not have the resources available or the expenses needed to then deliver to those sales either. So forecasting is very tricky, but it's one of those things of what is the realistic number that I should be targeting for this month, and then what is the realistic expenses I need to plan for to deliver to those expected targets.
Absolutely, quite right. Yeah, and I mean, yes, it's easier that if you've actually been a little bit conservative, that if those sales do come in, it's easier then to get into a second action plan of how you're going to deliver against it, rather than having a big budget and expense account, and then having to try and cut those expenses. So it is a fine line, and it does take a bit of work and foresight to make those calls on how you're going to sell in the company. The other thing that we are sticklers for, and our customers that are online know this, is your record keeping. A lot of the customers that we initially started out with used to do everything on a spreadsheet, an Excel spreadsheet, which, yes, is a great tool, but it really doesn't make for accurate bookkeeping, and it's time consuming, in my opinion. Once you understand how an accounting package works, you literally will be on your business every single day, and you'll understand what's happening in your business. So we recommend a proper tool to use and make sure that you stay abreast of what's happening. Then as well, if you are selling to customers and you are giving them credit, so if you're giving your customers credit and you are having to fork out money for your the goods that you're selling, then that will have a huge impact on your cash flow. So try and make sure that any negotiation that you have with your customers, you make sure you get 50% or 70% in upfront prior to procuring your goods. Then, as we discussed, poor receivables. So in other words, when you do get into the space where you are giving your customers maybe 30 days to pay the balance of your invoice, make sure that you chase that money. I'm a firm believer that by the 25th of the month, on your accounting package that you're running, you send out statements, you hound for money. If that money hasn't hit your bank account by the end of the month, when it should have, then on the first of the next day, you send out another one and you ask for that money again. Don't be shy to ask for money. And I know Henk and Damon are going to go, sure, she's finally learned. Once you become VAT registered, and for those that maybe not there yet, you have to consider VAT once you are turning over around about 80,000 a month over a 12-month period. So in other words, in any year, any 12 months that you might make R1 million, you have to get yourself VAT registered. That is a SARS regulation. And what often happens is when you are charging VAT at 15%, you're getting that money in and you're going, oh, cool, I've got all this money. Let me go and spend it. I need a new laptop or whatever. When you get to your payment terms for SARS, which the smaller you are, it's only every second month, you suddenly realize, but I don't have that money. You haven't put it aside. You haven't thought of what to do with it. And now you get to crunch time where you've got to pay SARS. What a lot of customers do, and we recommend that they do this, is I'm talking FNB specifically. They've got a cash stash account, which they generally give to you when you open up your business account with them. As you get your money in from your customers, just take that 15% off and put it into your cash stash account. That will assist you with ensuring that you don't have a problem with SARS. Yes, sometimes we dip into it and we might need it, But just understand then what is your forecast going forward to replenish that money before you have to commit to your SARS payment. Also, a lot of business owners tend to think, well, this is my business. I'm putting on all the effort. I'm not taking a proper salary. And they end up spending a lot more money than the business can actually afford. And that obviously can have huge implications on your cash flow monthly. So what you need to do, and this is what we work with a lot of our customers on, is if you're going to go the route where you are going to allow the business to pick up some of your expenses, and there's a reason why you might do that, just still manage that cost. So know, for instance, that you cannot go out and have 10,000 rands worth of entertainment allowance. You only allowed to have about a 2,000 or 5,000. But just be cognizant of that cost going out of your business. Could
Barbara?
also be little things, yeah.
Sorry, there's a very nice rule that states you should have 3 pockets in your business or in your personal capacity. On the left hand side, your business pockets, on the right hand side, your personal pockets, and on the back end is your savings pockets.
There we go.
And the better we can try and keep those 3 pockets separate, which of course we know as business owners is difficult sometimes, but the better we can do that and split those expenses and split those needs, the better obviously our cash flow will look and the better our business will do as well.
Absolutely. I think also one of the things that we focus on, especially when we take on the individuals in business, and a lot of them that are sole props, is very quickly to try and separate themselves from the business as best as possible. Especially as you start to grow your business and you maybe bring other partners in, you want to make sure that your business doesn't look like it's a cash cow for you. So understand where you're going in your business and then start to plan it accordingly. And then the last thing on this one about cash flow management is make sure that you do a short-term forecast, what we call our liquidity analysis. And I generally in our business, because month end for me is obviously crunch time, this would be obviously based on debit orders that might be going through your business, salaries that you have to pay out. I set up my liquidity analysis and I put down all my costs, and we'll show it to you later on the slide. And then I make sure that I've got money in the bank account. If, for instance, I am starting to touch into overdraft and I'm getting maybe to the limit of my overdraft, we've devised the spreadsheet in such a way that it will actually highlight for you that now you're actually running into a cash flow problem, and you need to find funds quickly if your customers don't pay you. So on that actual cash flow forecast, I'll show who owes me money, but that doesn't mean that money necessarily comes in. So what happens if
Barbara,
yeah.
Sorry. So for all of our customers who think we can't go out for drinks and stuff, it's because Barbara's making us not have extra drinks with our customers because we might take it to our overdrafts.
Yes. So bottom line is you just want to make sure that if you get to month end and you're seeing, okay, I've got VAT to pay this month, I've got a certain amount in salaries and supplier payments. If there's not going to be enough money in the bank, where do I go to get that money? Do I make sure my customers pay me timeously? Or do I actually have to go to the owners of the business and say, guys, we need money, we need funding? And obviously it depends where your business is in terms of what sort of an overdraft you have. But obviously a lot of little business owners will have to actually put money into the business themselves. Okay. All right, next one. Poor cash flow. So what are the signs, the clear signs that you are overtrading and cash availability is a bit of a problem? All right. So you need to borrow money to get through each month. And that goes to my point of asking somebody to prop up the bank accounts. And often that will happen because during the month, something happens. You need to suddenly fork out a few bucks on something that you didn't expect. Maybe your printer broke and you didn't have the cash. It wasn't in your budget. You expected maybe only next month. So you now need to figure out, how do I get money to actually prop up my cash flow? The one thing I can say is if you do have to go to the shareholder or the owners of the business, they should know it themselves. So they should have money available to put back into the business. But the one thing I'd like to say to every single business owner, and as you go through your businesses and grow, make sure that you always pay your staff by month end on time. Because the last thing you want is your staff to get the feeling that there's something wrong in the business. So that's my one recommendation to those people that have staff. You always pay your staff first. You worry about yourself as the owner or the director later. The other reason why you would have poor cash flow is your profit margins are too low. A lot of businesses operate in very competitive markets, and as such, they obviously have to keep their prices pretty tight, because they know that if they don't, somebody else is going to take that business away from them. And that can have quite a serious impact on your cash flow as well. But you need to make sure that you're not going to bleed in the business. The other way to obviously fix that would be, well, I'm going to actually do a better service than my competitor. Again, we touched on if your customers are making late payments, this can have a huge impact in terms of having to scramble for money. And a lot of us do play in a bit of a space with corporates. Corporates are notoriously bad for not paying timelessly. And the biggest thing I can say here to business owners is you need to build those relationships. I can see Henk, I can feel Henk jumping up and down to say, sure, she's learning. It's about actually picking up that phone, having a conversation, and just making sure they're on your side, so that when you send them a statement, they will say to you, it's on the way, I've put it through, I've processed for you. When your key suppliers start getting nervous, then you know that you are pushing boundaries with them. So a lot of your suppliers love the orders and they're very happy for it, but they will very quickly pick up if you are starting to pay them a little bit later. And that could be because customers are paying you later. And you want to avoid them getting nervous about your payment terms with them. What does happen, and we've seen this, especially with COVID, I think a lot of people were caught with their pants down with suppliers. And the biggest thing here with your suppliers is communication. If you are struggling to make payments, don't duck and dive. Just log a call to whoever you're dealing with, or go to the head honcho and just say, bear with me. I'm going to put a payment plan together and I'm going to make sure I get this settled. You get far more buy-in and your business will carry on running without too much of a hassle. And then, of course, your advisors, that would be us, or your finance manager, they're starting to really show signs of discomfort in your business. So you need to listen to them. A lot of business owners, if they have got a finance person in hand or in-house, that person is seeing exactly what's happening and understanding the cash flow pressures on a day-to-day basis. So you need to understand as well that if you have a finance manager that's not actually a business owner with you, they are just helping you manage the books, they are going to have a very different impression of how you're running your business. So if they see that you are eating out a lot, playing golf a lot, or you living the high life, but you're actually not paying their salaries on time, the negativity levels in your business are going to grow. So always make sure that you speak to your finance manager and they understand where the business is at any point in time. Okay. This is a little bit of a busy slide, and I'm not going to go through it all with you, because a lot of this information we've gone through with you already. So you can check in with me if you like, but there's many ways that you can actually come up with a solution, and we can help you with it. So if you are in a bit of a cash-strapped position right now, you can check in with us and we can go through this with you, see where you're at right now, and just move your business into a more flush, and we'll help you come up with ideas of how you can change the way you look at your business. Okay. You guys can, sorry, I'm going to just bounce through all of this. We'll give you a little bit of tools, I think, after this slide. There we go. So if you want to improve your cash flow in your business, you can just put together an Excel spreadsheet if you're not in the space of actually using an accounting package. And again, I would recommend that you guys get into that if you're not there yet. But those are the few items that you can look at. Your debtors. So in other words, with your debtors, are you getting your money in quick enough? Can you change your payment terms with them if you can benefit your own business? Automate your invoicing, which is having a system in place, and then know how to follow up for monies that are due and not paid to you. You can charge interest, but if you want to charge interest to your customers, you have to make sure that it's stipulated on your invoice. Otherwise, you're not allowed to do that. because we're not financial institutions. But if your contract or your SLA agreement says that interest will be charged on late payments, then you can do that. Cash discounts, you can offer your customer 2% discount if they pay you by month end. If that is your normal terms, then I wouldn't offer that. Then I would try and discipline them. But let's just say you actually have a bit of a cash flow issue, which you don't want to divulge. But you can say, listen, guys, if you pay by the 25th, I'm going to give you a 2% discount. Okay. So you can work around it. On your creditor side, your supplier side, see if you can change your payment terms with your suppliers. So in other words, what you want to create is you want to make sure that your customer money is coming in before you actually have to pay your suppliers. And that will give you a nice cash flow, a way to manage your cash flow and make sure that you're not always at the sort of end of the bottom feeder. So you can talk to them and, make an appointment with them, pick your key suppliers and say, look, I've been doing business with you for this long. I'm giving you this amount of business. Can we renegotiate terms if they're still expecting you to pay sooner rather than later? Inventory, that's a big part as well. So it doesn't help that you go out and buy 1,000 pens and you only sell 20 a month, because then all your money is going into buying your stock. It's lying in your storeroom. Yes, it's a balance sheet item. You're showing that you've got that money, but it's actually not moving. So annually, you need to just make sure that you're checking what are you selling? Is it actually moving? If not, then reduce your spend on your inventory to make sure that you're not putting yourself into a predicament cash flow wise. And then your loans. And obviously, I know a lot of business owners, because of COVID, the biggest thing that if you want to get loans, you would have to go and present your financials. You need to be on top of your management accounts. So people want to know where your business is and why you need that loan. Even your bank, you can't just increase your overdraft. Your bank will want to know, what are your forecasts? Where's your business going? And how soon can you repay that in need? What is the reason that you need that money? But as well, you can renegotiate terms of loans as well and get yourself into a better footing. Okay, so there is a lot of ways that you can improve your cash flow, but it does take work. It's not an overnight, and people are not prepared just to give out money at this point in time. Is there any questions on that? No? Okay, I think again, just to remind you guys of all of this, there's very little you're going to do if your company financials are not up to date. So make sure that you've got audited statements, and by audited, I mean compilations or reviews. You don't have to have audited statements, and make sure that you can present to the bank or anybody else your up-to-date management accounts as late as the end of October. All right. Then other ways to actually improve your cash flow. So your product and services pricing, is it too low? Make sure that you can compete with your opposition in the market. Make sure that whatever you're paying for your goods, if you're buying product and then selling it, make sure that the purchase price that you've got, you're selling it at a rate that, and yes, there's ways of doing that, and some industries have to do very low markups, but just have a look. Delivery fees or packing costs or whatever, understand what is included in that pricing to sell your product. And then how do you compare to your competitors? Make sure that you understand exactly what your competitors are doing. Go out and do research on what your competitors are doing. If you're not selling enough, so in other words, you've got fixed prices and you understand what your margins are, but you need a lot more sales, then you need to understand, how do I penetrate the market better, smarter, quicker in order to do that turnover of sales? And then your profitability of the business. Again, what are your trade costs? What does it cost you to buy product? Our business, for instance, we services, we advisors, so we pretty much have no cost of sales against our businesses, except maybe if you want to call travel and that, but that's actually an expense to the business. Do you understand your gross profit breakdown? So we help business owners to look at their different products that they sell, and we get them to actually understand what it costs them to deliver that service to their industry. And last but not least, Have you done your trifecta scaling exercises and your sales plan? So your trifecta, for those that have been with us, is your product, can you train on it? Is it valuable to your customer? And is it a repeatable business? Okay. Then just quickly on penetration pricing, and I'm going to run through this quite quickly. When you're a new business owner, you literally have to go lower in terms of pricing because you just want to get into the market. You've got a lot of competition, you're not known in the industry, so you pretty much try and undercut everybody just to get into the market. It takes you a long time maybe to start showing profits, so penetration pricing you don't want to do for too long. You want to get in the market, you want to show what you're capable of, and you don't want to undermine your brand and your image. Just bearing in mind that if you're coming up against a corporate or a bigger company, they can stretch out their pricing a lot longer than you can as a small business owner. Once you've got a little bit of confidence in what you're selling and how you're doing your business, you can start looking at your competitors and you can price yourself a little bit more effectively in the market. And this will help you stabilize your business. And you can then focus on how you're going to get your product distribution and promotions into the market. And then skimming, obviously when you've got a niche product and you're at the top end of the market, you pretty much can charge a premium price, especially when you're doing luxury products or very unique products. It is risky when you've got other strong competition or maybe a low perception of what you're selling in the market. So that's a bit more of a risky one. Most people, I suppose, play in that middle market pricing sector. We ourselves know when we started our business, we did come in lower until we actually had set our own offer in the market and understood what we were selling and how we were selling it. So, you know, we've got a nice idea of how that works to start off and then get yourself stabilized in the market. Okay. Then just quickly, this is something that we live by and we work with our customers on it as well. So this is the example of a liquidity report. You can see at the top here, I show, for instance, bank balances. So if you've got an overdraft, you put in your overdraft. You show where you currently are, what money you have in the bank. You can have various loans or credit cards, petty cash lying around. And what we've done is we've tried to give you an idea of what cash available. So if you need to pull money because you don't have money at month end, you can see where you might have cash reserves. What we've done here, and I must give credit to Damien, this is a spreadsheet he put together for me. For instance, what we've tried to do is say, okay, fine, you've got an overdraft of 100,000. If I'm going to go over that overdraft value, it's going to highlight it for you and it's going to give you an idea of what do I need to do to make sure that I can afford this cost that's going to go through my bank account. Obviously, I haven't populated this full, but as you populate it, it's going to give you the variables in your bank accounts. But that will give you an indication that now I need money. I don't have cash to pay my debts or my bills. Okay. So it's important that you understand your monthly expenses, costs, and understand whether you've got money to meet those commitments. We can also do ones that go a little bit longer. I just pretty much work on a monthly one, but obviously I think as a business gets bigger, you might have a more of a requirement to look further into the future. All right, then getting into wrapping up. Again, what we learned in COVID was, yes, you need to implement your strategies and your cash flow would be one of your strategies that you need to make sure you do it with speed. If you make a decision, get it done, work it. Don't think about it and leave it for another month. Get it going. Do it with intent, commitment, and focus. Be transparent. And this comes in again, as a business owner, you need to let your staff know where you're going, because your staff are the first people that will pick up if your company is taking strain in terms of cash flow. They can sense it. You as a business owner come across stressed, you don't sleep properly, you may be a little bit ratty, and your staff will know. So make sure that you do something in your business to fix. Talking to your customers to pay differently let your staff know that they're on board with you to do the turnaround. And then create an environment and cooperation from all parties. So that is talking to customers, talking to suppliers, making sure your staff are on board, that they can have the same conversations with those people that are key to your business, and ensuring that it's a success. And again, one thing I've noticed and learned in business, and especially with the customers we're dealing with as well, don't disregard your staff. If you've got a staff complement, they're key to your business, and they need to be involved with you every step of the way to make sure that you as a business owner survives. All right. Then last, just a reminder on various resources that we dial into. So if you need help, that's what we're there for. Feel free to give us a shout, and we can work with you and help you go towards the goal of making sure that your business stays afloat and becomes profitable and something that you can be proud of into the future. And that's it. Any questions or anything you'd like to share with us? No?
Hi, Barbara. I don't have any well, I do have millions of questions, but I'm not going to ask them all here. But I just want to give a shout out to you for helping me recently with my my finances. I don't know what to call it. My pet hate. But just trying to, make things smoother and more in line, and helping me understand it better, because for me it is, when I don't understand something, I completely want to just put it in file 13. So, and I know I can't do that with the business finances. So just to thank you for being patient with me and teaching me, and hopefully we're almost there. I think maybe
no, I think
there.
You are. Absolutely. And Lisa, I think you must be one of the people that, we helped to get onto stage. And you actually are doing a phenomenal job. So yes, there's a few little things that we don't always know, and that's where we come in to help you. And as I said to another customer today, our job is to teach you to do it, that you don't have that fear factor, and that you are comfortable, that you know exactly where you are in terms of your business. So you're doing well. Well done. Well done.
Thank you.
And you are.
Thank you to you too.
Yeah.
Thank you.
Yeah. Anyone else? So Helen, how are you doing?
Hi, Barbara. Well, how are you?
How's your stage going? How's your accounting going?
We're going to have to sit down for hours to catch up. I got confidence in your guidance, and you definitely get things in order. Look, it's very easy. I agree with Lisa. It's so easy to just kind of dig your head in the sand and just not want to deal with it. But the feeling after you finally achieve, even if it's just a month of capturing and getting the stuff in, you really get into a momentum, and finally, you feel the sense of accomplishment. But I do have a question.
Yes.
And that question is, you mentioned something that I think many of us, obviously realized during the COVID period, is that rainy day fund or emergency fund. And I've always tried to figure out, besides the VAT part of things, I'm lucky I work in an industry that is VAT exempt, but like needing to have, for example, your emergency for like access to money in case of something that you really need to fix now. And then, of course, planning for, an emergency fund for, if there is downtime, God forbid we go through another COVID type situation, but, possibilities is there. Having that reserve. Where would you recommend parking the emergency fund for when things happen, and then parking the like the extended, or if your operations end? And then, of course, what percentage would you suggest we consider budgeting for? Because that would also be somewhat like an expense to consider every month, right?
Absolutely, yeah. So Helen, on that as well, it also depends who you bank with, and your bankers will often give you maybe like a call account or a interest-free savings account that you can just start to deposit money in there. And I think as well, it comes down to what can you afford. If you can't afford a lot, just start somewhere. Even in your personal capacity, we always talk about the fact that just start with 200 Rand a month. Just put it away and leave it there for a rainy day. And as you start to build your company and you see your company growing, just start increasing that amount and just put it away. Soon you won't even realize that it's actually, been put away, because it's such a nominal amount that you've decided to start with. And then just build that. And the bigger your call account, so once you have, say, over 100,000 in a call account, you start also earning more interest on it. So it's just a way to, I wouldn't say that you need to have that amount, but, with the pandemic that we had now, 100,000 Rand in a call account would have been a nice little option just to keep you, going. So
yeah, for sure.
I think each business owner will make up their mind how much they can afford to put aside on a monthly basis.
Okay.
But start somewhere. Just start somewhere.
Yeah. Thanks, Barbara.
Cool. Pleasure. I see Vukani just asked if we use Xero. Vukani, no, we don't use Xero ourselves. I'm very much a Sage fan, purely because it's local, it's lacquered, it's a little bit cheaper. So no, I've seen it, but I don't use it. And we have got the slides available, and we can send it through to you. It should all be on YouTube. Okay, I think that's it, guys. If there's no other questions, we're going to wrap up. Thank you for being here. Thank you for attending. And if you've got any questions on cash flow, or if you need help, give us a shout. We're here, and we'll assist you where we can. Okay, thanks, guys.